Our topic today is home insurance. Even though most of you don't have a home right now, we did a quick survey in class and most of you would like to be homeowners in the probably not too distant future. So there are several things you should know about home insurance going forward. You want to know what types of coverage you have available to you. And good thing to know is what is and isn't typically covered by your insurance. And you have some different choices in the policies there that you may make based on what coverage and such. And also, how much insurance do you need? Remember, insurance in general is designed to protect us against financial losses. So if there's a loss that we couldn't afford, we want to make sure we're covered for that. Now, I am, of course, continuing to hide out from the coronavirus, as I hope you are too, but enough camo coronavirus hiding, and I feel more comfortable in my river hat. It gives me a sense of security there. I feel very safe on the river. And, well, I'm not on the river now, but I've got that good old river feeling. So, with home insurance, if you own a home, you face certain perils. These are things that could cause you a loss of the value of your home, financial loss. So what are some examples? Think of for a minute of things, well, that could go wrong with owning a home that would cost you money. One we often think of is a fire. Actually, one of my friends at work, the house just across the street and not far down burned down not too long ago. So fire is a potential peril that you have or face with home ownership. Tornadoes, could be hit by a tornado. We had tornadoes hit somewhere in Alabama. It was in Alabama not too long ago. You also have theft of your property in your home and such. So these are just some, well, in Florida we have hurricanes too, as another big one. But there are many things that could cause you a financial loss related to your home. There are things that could cause a loss of income. This doesn't relate directly to home ownership, but some events that could cause a loss of income, death, obviously, that's the big one, disability, unemployment, coronavirus unemployment. So these are things that interrupt your income flow and things that we have talked about insuring for, at least these first two already. And well, with the third one, we do have unemployment insurance through your employer, and we also have, again, my sales pitch for that rainy day fund. A hazard is something that increases the likelihood of a loss. So let's think of some things that make you more likely to have a financial loss, not just for home ownership here, but this is a definite no-no. If you drinking and driving, that's definitely something that could lead to a loss. Don't do that. Also, thinking about at home, smoking in bed, people fall asleep and end up mattress catching on fire and burning down the house. Smoking, period, increases the likelihood of you have health insurance claims. Back to the house fire here. Sorry, such a cheerful topic here. If you have defective wiring in your house, that could make you more likely to have a loss. So those are just some examples. Now with insurance, some things we can get insurance to protect us for, some things we can't. Well, let's say I'm worried about my house flooding. Can I get flood insurance? Yes, this is something that is insurable. So what insurance companies do is look at the probability of a loss and price insurance based on that. Obviously, I'll say with like hurricane insurance, if you live right on the beach, you're going to have a higher rate than someone who lives 200 miles inland. Oh, that was a little bit warm. Now, can I buy insurance? I'm planning to go to the casino and do some gambling. I don't really do this, but let's say we are. Can we get insurance to protect us against our loss before we head out on that trip? That's not something insurance is designed to protect. So you aren't going to get gambling loss insurance on your way to the casino. So insurance works when the amount of the loss is predictable. Even though we can't predict our loss, well, we can predict our maximum loss, but we don't know that we'll have a loss, etc. What insurance companies do is look at the overall probability of a loss, and they can price based on that. So they're not going to sell most likely just one policy. They look at the overall probabilities and price based on that. So again, remember, they price based on the probability of a loss and put in a little bit, obviously they ought to put in extra for their profit. Now, another insurance term is risk. Well, we have risk in a couple places, but so risk is just uncertainty, and related to insurance, we don't know whether we'll have a loss on our car. We don't know whether we'll have a loss on our home. If we knew, hey, we're not having a loss this year on our home, guaranteed, well, we wouldn't buy insurance. The reason we buy it is because we don't know if we'll have some kind of issue this year. We don't know if we'll be like Panama City Beach and get a Hurricane Michael. We don't know if we'll be in a car accident or not. So that's why we buy insurance. We have some financial losses potential that we can't afford or don't want to have to cover, and we buy insurance to pay us or help us out in the event those things occur. So let's say you wanted to eliminate the chance of having an auto accident or the chance of having property damage at your home. What could you do? Well, this is an easy one. You want to eliminate the chance of an auto accident? Don't ever get in a car. Want to eliminate the chance of having property damage? Well, don't buy property. Those aren't ideal solutions, though. So we can't eliminate these events, but we buy insurance to help protect us financially if we do have them. So what we're doing is risk reduction. So insurance helps us move that risk elsewhere. But some other things we can do, jump the gun here a bit, via risk reduction is do things to reduce our risk. So what's the way to reduce your risk when you drive a car? And everybody should do this. What should you do when you get in your car? Obviously, wear your seatbelt. That reduces your overall risk of being harmed in an accident. And so definitely wear that. Another thing in your car, some other things in your car, don't speed, drive to safe speed, drive defensively, watch out for the other people. One thing, if I'm the first car at a red light and the light turns green, I don't just immediately pull out. I'm looking to make sure the fool coming from the other direction is actually going to stop before I pull out. So that's an example, of defensive driving. Make sure your car's running properly. Check your tires. Make sure you've got, the tread. I think the rule is stick a penny in the tread, and let's see, if you can see Abe Lincoln's head, then you've got not enough tread, maybe time to look at new tires. But anyway, so make sure your car's running properly and well maintained. So these are things that you can do to reduce risk with auto accidents. What can you do to reduce your chances of having property damage? Well, we kept having these. I kept popping up. Fire is a thing you could have go wrong with your house. So everybody should, of course, have smoke detectors inside your house. To reduce the chance of theft, you could install deadbolts and have alarms. So, and then maybe have an alarm service, so you can have an alarm that just goes off of your home, or have an alarm service as well, so have alarms installed. And then, well, if you avoid high crime areas, don't live in a high crime area, that's obviously a way to avoid crime, but you can't always do that one there. So let's say you've got a car that's worth $500. Should you pay $300 per year to cover potential damages to your car? Well, most people would definitely say no. You know, maybe the chance of you having an accident or something damage to your car is slim. So why pay $300 for insurance for damages to your car? You would be better off taking the $300, putting this in your rainy day fund, and having it there in case you have damage to your car. This is different than having car insurance that cover liability, but we've got that coming up. So if you don't have insurance to cover the loss on your car, you are assuming this risk. So when you buy insurance, you're transferring the risk of loss to the insurance company. If you choose not to be insured, you're assuming that risk. So you're basically self-insured, which in this case, if you had a car worth only $500, assuming the risk of damage to that car, again, just of damage to that car, not to other things, is probably a smart idea. And you just, take on that loss. So if your car is smashed up by a runaway buffalo, I don't know where you were for this buffalo to run into your car or why I thought of that, then you would be on the hook for paying for that yourself, no insurance. Now let's say you've got a house worth $100,000. Should you pay $500 a year for insurance to cover your house? Now this is a different issue. You've got a potential $100,000 loss. Most people could cover that $500. Well, I don't know if I should say most, but ideally you'll be able to cover that $500 loss, and it wouldn't make sense to pay $300 to cover that. Just put the $300 in the account, like I said. But most people probably don't have a spare $100,000 laying around, or even if they did, don't necessarily want to have to part with it. So in this case, paying that $500 likely makes sense. This is where we have insurance. We don't want to self-insure for that potential $100,000 loss. We transfer that risk to the insurance company. So insurance, as I've been saying, is all about shifting or transferring risk. We decide we don't want to cover this potential loss, so we pay for insurance and transfer the risk of loss to the insurance company. So it's part of our overall personal finance strategy. We do other things to, we talked about saving money and this type stuff, but this is all about protecting our assets and our money and our families. A couple terms here that you want to know related to both home and auto insurance. Liability. So a liability means you are responsible for an injury to someone, that person, or their property. So with car insurance, we'll talk about later, liability insurance is something you have. So if you're at fault in an accident, you could cause harm to a person or their property. So this is what liability is about. You're responsible for harm to somebody's property or the person. Negligence is if you don't take reasonable care. So you have a liability issue if you're at fault for the wreck. Negligence is, hey, you didn't even bother taking reasonable care. And more on that coming up. So, some examples of personal liability concerns. I've mentioned one already here. If you've got an auto accident that's your fault, So you didn't see someone coming and you pulled right out in front of them. That would be a liability issue. If you run an extension cord across the major walkway and someone trips in your house and is injured, that's a potential liability issue right there as well. Negligent behavior goes a little bit further than this. With liability, maybe you didn't see someone coming. An example of negligence while driving is one, don't do this, texting while driving. I'm a big anti-texting while driving fan. You don't want to do this. You can actually, I'm okay with pressing my steering wheel button and telling Siri to tell someone something and then having Siri read for me, but I see no reason to be typing and looking down at my lap while I'm driving, so please don't do that. That would be an example of negligent behavior. I guess I used that extension cord example. That, depending on where your extension cord was, could be negligence, I guess. But if you leave marbles laying on your stairs when you have guests coming over, that could be an example of negligence. But anyway, so negligence is, you're not exercising reasonable, ordinary care that most people would expect. Vicarious liability won't be an issue for most of you anytime real soon, but you're responsible in some cases for the actions of other people. If you have a youngster and they're out playing with rocks or baseballs and they throw one through your neighbor's window, you can't pin it on the kid and say, hey, it's not my fault, it's Junior's fault. Well, in this case, you would be responsible. So let's get to our home insurance here. So these are some things I do want you to know about in general. So the basic items here. What are things that are typically covered by most homeowners' policies? You do want to check your policy to make sure, but we're going to address things that are typically covered by homeowners' policy. So with most homeowners' policies, we've got here damage to other structures. What do I mean by this? Well, if you have a little shed behind your house, that is likely covered up to 10% of the coverage of your house. So if you have a house that's insured for $100,000, you generally have automatic coverage of $10,000 for that external structure. If it's something, well, we had a big steel building built, and that needed extra coverage. But again, if we just had a little structure that was just outside there, that would typically not require any extra coverage. It's automatically included with the coverage of the house. Do make sure though. If you have damage to shrubbery and stuff, that is generally covered up to 5% of the damage of the house, but not wind or storm damage. So if you had some nice landscaping around the house that burned up with your house, that would likely be covered up to the limit there. Now here's a nice coverage. So in your house, you probably have, well, you have clothes, you have furniture, you have your big screen TV, you have your computer, you have whatever. Typically that is covered, you need to check your policy, by 50 to 75% of the coverage of the house. So what I mean, if you have a policy, $100,000 policy on your home, you are likely automatically insured for at least $50,000 for your contents, maybe even $75,000. So that $100,000 homeowner's policy would be paying you if your house was destroyed. We're going to talk about deductibles and such coming up, but that $100,000 policy might pay you $100,000 for the house, $75,000 for your contents, depending on your policy limits there, and then $10,000 for your shed that was nearby that burned down as well. So that policy might, and then maybe some more from some shrubbery. So you might be collecting $185,000 or more for that $100,000 homeowner's policy. So it's more than just the home. And over time, most individuals, the contents do start to add up. So they are something you definitely want to consider. Now, don't lose sleep over these HO1, HO2, HO3. So HO1 is basic coverage, HO2 is a little bit better coverage, HO3 is kind of the best coverage. We're going to touch on these real quickly, but basically what you'll want, the end story will be, you want the best coverage generally available, and it's going to be this HO3, and we'll talk about why that is. But I'm not going to, you may have some homework on this, but I'm not going to say what's HO1, what's HO2, what's HO3. We back up. I will want you to know, rough idea about these. If I ask you some general questions on these, like, hey, your shed burned down, and it was a $5,000 shed on your next to your $100,000 house, are you covered? Well, you are. Hey, your thief broke in and stole, while you were on vacation, and stole everything in your house. Are you covered? Well, you are up to these limits. So those are the type of things I do want you to know. Don't worry about this stuff here. This HO1, HO2, HO3. Anyway, so the most basic coverage would include you for some of the stuff we've already talked about. It does not include trees falling on your house and such, or burst pipes. One limitation for this basic coverage, and we'll talk about this, what this is actual cash value. This is kind of lame. You don't want actual cash value coverage for your home or contents. Actual cash value, though, is mostly the only option for cars, which we'll get to later. But for your home, you do not want actual cash value. So what actual cash value is, and I've got this coming up, we're going to touch on it again, but actual cash value means, hey, basically, here's what you could get for this if you were selling it on Craigslist right now. So for your contents, hey, you bought this couch 3 years ago, brand new, it was a great couch for $2,000, and it's stolen, and right now your insurance company says, hey, it's worth $700. I don't know what they're saying it's worth, but anyway, so assume this is what you paid for it, less some depreciated amount, and they may say after 5 years your couch isn't worth much, even though it would cost you a bundle to replace it. Likewise with the home and all, this is not the option you want. So what is included in the basic coverage? Fires, theft, explosions. Hopefully we won't have any coronavirus riots. I'm not expecting that. There are people rushing out, getting guns and stuff. I don't think that's going to be an issue. There are people wearing camo and hiding out, but yeah, I'll be okay. Smoke damage, vandalism. Well, if a plane flies into your house, that's not going to happen, hopefully. Don't worry about a volcano here. On Hawaii, you might have to pay extra. Actually, they built houses where in some really dumb places and had lava flows. But anyway, lightning. Our house we had was one of our houses. Our last house we had a lightning strike right next door. Well, actually, it was at the tree between our house and the neighbor's house, and the neighbors, we had some stuff fried, but I don't think it was enough for the deductible. Our neighbor's house, they had damage from 3 different lightning strikes, and this is one of those neighborhoods where you're kind of close. And so that one time the tree between our houses, sort of in the front yard though, was gotten. Our stuff was fried. But they actually had a smoke hole in the ceiling for one of the events. I don't think they had a leak in the roof though. But anyway, so I don't know how lightning works. But yeah, so it covers that. One of the deals, our neighbor was going in, unlocking the front door, and he felt his hair standing up. He got inside real quick. But anyway, so that is covered with your basic homeowner's insurance. Oh, the reason we didn't get money with that, I'll talk about later, has to do with deductible. They did, I believe, get enough to cover their deductible. They being my neighbors. So you can get a little bit better coverage that does cover things like damage from trees falling, maybe electrical surges. If your pipes burst or water heater leaks out, you could have your carpeting ruined and drywall ruined and stuff. This isn't going to be an issue for us. Ice or snow causing damage on the roof or whatever, that's a little bit better coverage. Well, yeah. Now these may be upgradable to replacement cost. So again, we're only going to want insurance that has replacement costs. So what is this? So let me go back to that couch you bought. And let's say you paid $2,000 for the couch. You paid $1,000 for your two nice recliners, and you paid, I don't know I guess you got a fancy 4K 65-inch big screen TV. I don't know. Let's say it costs $1,500. I don't know. I'm not buying one right now. And so that's, I don't know. Let's say you just spent $5,500 worth of stuff, but you spent that 5 years ago. So $5,500, and that's just part of what you own. So let's say all of your contents in your home are destroyed. That's not good. And the actual cost value plan there, the actual cash value that we mentioned before, would say, well, you bought that stuff 7 years ago. A 7-year-old TV, it was $1,500 now. We'll give you $300, and we'll give you $400 for your couch, and we'll give you $200 for each recliner. So now you've got whatever that added up to. I wasn't paying close enough attention when I gave you those numbers. So let's say they give you, I don't know, pretend that stuff added up to $1,100, and well, you've just lost $4,500 or $5,000 worth of stuff, and you've got $1,100, and that's only part of what you lost, and you need to go out and get new stuff. Well, you need to go out and get stuff to replace that stuff. Do you want to be shopping on Craigslist for your couch and for your TV, because you can't get a new couch for a couple $100 now? The one just like you had is $2,300, let's say. So you're kind of bummed out. Not only do you not have your stuff, you only have enough money with the actual cash value policy to go buy used stuff. A replacement cost policy is what you want. So with a replacement cost policy, the contents in your house, well, imagine you had this hat's like, oh, this is a nice hat. These are Tilly hats. They cost like $60 or $75. I don't know. Anyway, so you want enough to where you can go buy new items, buy new TVs, and not have to be shopping around for secondhand stuff. So if you had a nice wardrobe of stuff, you don't want to be having to shop at the thrift store to replace them, or on Craigslist. You want to be able to go out and get comparable stuff. So that's what a replacement cost policy does. It gives you what it would cost to get new stuff right now. This is much better. You don't have to be shopping around to worry about getting older stuff. Not that there's anything wrong with that. So the Primo policy, this is the one we generally would want, is whatever the best coverage you have, best homeowners coverage you have, will generally cover replacement cost. So you want this policy, and most of the policies that you get offered by insurance agencies will have replacement cost and will cover all this other stuff. So you want enough to where you could, if your house burns down, you want enough to be able to rebuild your house like it was and buy contents like you had, all nice and new, and get you back in good shape, as good as possible, good and going. So that's the kind of coverage you want. So replacement cost. Remember that. Actual cash value gives you what it cost less depreciation. Remember, depreciation was one of those accounting terms we talked about back when we looked at our personal balance sheets. So that depreciation assumes the value of your asset goes down over time. So the insurance company, using actual cash value, would go, you got a $2,000 couch. The lifespan of a couch is 10 years, and maybe the value goes down quicker up front, and your 7-year-old couch is worth $400. So that's how actual cash value would work. I don't know exactly how they depreciate couches, and don't care, because I don't want one of these. I want the replacement cost policy where, hey, here's what it costs me to get a new one. And if they don't give me what it really costs on that, then I can complain. So that's the kind of policy we're looking for. So other things that are, there are some things that are not covered even by the best policies. Well, not covered without us doing something, getting an extra rider of sorts. So earthquakes, generally not covered. In California, we'd be having to buy earthquake insurance, just like we have to pay extra for hurricane insurance here. That they'd be having to pay extra for earthquake insurance. Flood insurance. If you live in a flood zone, you're going to know about it. If you live outside a flood zone, you won't know about flood insurance. You'll just know you aren't in a flood zone. But if you do have a flood outside of a flood zone and you have home insurance, you are not covered. So I think it was 2014, I think it was 2014, we had in Pensacola, maybe you were here for it if you're in the if you were in the area, 2 feet of rain in 24 hours. Man, that was a big event. There was flooding in all kinds of places that are not flood zones. If you got 2 feet of water falling from the sky real quick, the water's got to go somewhere. So many people were not covered, did not have flood insurance, and were not covered. Rivers went up, etc. Flooded some places that were expected to be flooded. People with flood insurance would have been covered. People who did not have this, did not have special flood insurance, not covered. There's another California issue. They got a lot of problems, don't they? Mudslides. So you need special insurance for this. There's some scary places out there in California where like whole sides of mountains go sliding on down. I'm feeling kind of safe here in, hurricane zone. Although again, we had Hurricane Michael, which I have friends in Panama City. That was not a good event. All the trees snapped off. That's really depressing. If we are attacked, we have war. That's not, if there's insurance companies would go belly up if we got enough to worry about with coronavirus, but so don't worry about this. And actually I have a paddling friend who's an allergy specialist, doctor, and he said fear is a bit overblown because in China, so they had 80,000 reported cases, and in China they've got a lot of people. Roughly the percentage of the population that was affected was really, really scrawny. Again, there's likely big time underreporting, but if you multiplied 80,000 times 10, said 800,000 people were really infected. That's still, the odds of getting infected are relatively low. So we've got plenty of other things to worry about, even though I am here in my camel hiding out in my river hat. But anyway, so if bombs were dropped on the country, there was an attack, that is not covered by your typical insurance policy. Nuclear accidents. If you live near a nuclear power plant, you'd need separate insurance for that, because they're big scale things like war. This, if there are bombers dropping bombs all over Florida, again, don't worry about that. Insurance companies would go belly up. They can't cover something of a scale like that, so they're just kind of saying, hey, we aren't covering that. Sewer backups, this is something they can cover, but they typically make you pay extra to get this kind of coverage. So, as I already mentioned, flood zones. In Florida, this is something we need to be attuned to, and some other states too. You need to know if your property is in a flood zone. Also, you may want this even if you, like I said, are outside of the flood zone. What's your probability of getting flooded? So we didn't get anything in the 2 feet of rain, so I think we have an event more than 2 feet of rain. Anyway, so but you might be in some areas. One thing here I never thought about before moving to Florida is a lot of the land is just real flat. I like a little bit of a slope, and I like to be a little bit higher on that slope, so that if 2 feet of water does suddenly fall from the sky, it can run down that slope and not just pile up wherever I happen to be. So, but anyway, so flood insurance, make sure you are covered if you are in a flood zone, or maybe even get it depending on what your odds are, how close you are to a flood zone. Even if you aren't in one, it would cost less for this. Now, this is, don't lose any sleep over this one, but if you've got George Washington's original home in Virginia, insurance company is not going to say, hey, we're going to put this back into, we're not going to buy antique elm banisters touched by George Washington to replace this. We're just going to, hey, we're not going to put it back into antique form. And so some of these houses may have a higher priced insurance because of their antique nature. But for most of us, I'm not going to live in George Washington's house, or I don't really like antique stuff. I'm more of a, hey, give me a new house. So State Farm, not a big insurer in Florida anymore. They moved out, but as far as I know, they're back in. We used to have State Farm home insurance, but we don't have it right now. Well, we have autos through State Farm, but not home insurance right now. But State Farm is a big nationwide insurer. They don't bother with any of that HO stuff. They just give you the top level home insurance with replacement cost. Replacement cost is what you want. It's the coverage that will get you new stuff like what you had up to your policy limits and rebuild your home like it was. You know, your home could be 20 years old. They're not going to give you money to put it back as like a 20-year-old home. They're going to get you money to build a new home comparable to what you had. That's replacement cost insurance, the type you want for home insurance. All right, some more home insurance questions, and I think I mentioned this one in another topic earlier in the semester when we were still together. Is my personal property covered if it's away from home? Surprisingly, so let's say I go to a VRBO this summer. I'm hoping we get to go to a VRBO this summer. Actually have 2 trips planned for the summer that involve VRBOs, and one of them will likely be canceled because it involved my 80-year-old parents flying, and odds are they won't be flying this summer. That was a trip to Maine. And the other one, though, is, I don't know if we'll be flying for that, but my daughter was going to fly up and we were going to meet and go caving, wild caving in the Huntsville area. But anyway, so let's say we take stuff to the VRBO and it's stolen, or the VRBO burns down. Gosh, don't let that happen, or I don't really want stuff stolen either. Is it covered? So I carry my computer there and some other stuff there. Yes, most likely it is covered. So you have your personal property in your car and you have home insurance and it's stolen. you may be covered. We'll talk about deductibles. You take it to the VRBO. Yes, you're likely covered. Stolen from your hotel room, probably covered. Again, up to policy limits with deductibles. And we talked about deductible with health insurance, so you already know what that is, but we'll talk about it again. If you have a second home, so you're, let's say we've got a mountain home. I don't have a mountain home. So you have your mountain home, and you take your stuff from home to the mountain home. Are you covered by your home insurance? Well, no, you'd be covered. You'd have to have insurance at the mountain home. So if the mountain home isn't insured, you've got a second home, you need to have insurance on that second home for stuff while it's in that second home. So that's, but for the most part, if your stuff is surprisingly covered wherever you happen to carry it. Let's say you live in a dorm and your parents have homeowners insurance, you're still a dependent. Are you covered under, are your contents covered under, is your property covered under your parents' policy? Most likely. So if something should happen to your stuff while in a dorm, check and see if you have coverage. Again, depends on your deductible would come into play here as well. So let's get into a different case here. The zombie apocalypse comes in and you've got $20,000 worth of hunting rifles. I definitely don't have anywhere near this. Are you covered? Odds are no, unless you may be partially covered, but for certain items, you typically need additional coverage for these type of things. Some things are more prone to theft and easy to sell. So guns hold up value pretty well, and there's a good pawn shop dealings in these. Your gun's not going to depreciate as fast as some items. So if you have a bigger gun collection, you might need nicer, you need additional coverage to make sure you're fully covered. So as mentioned, some other things that need or may need or likely need additional coverage. These are the types of things you should know for the exam too. If you have a whole lot of expensive jewelry, so let's say you've got your $100,000 necklace. Of course, I've got one of these. No, actually, I'll show you my entire jewelry collection, one ring. But if you had a $100,000 necklace and your necklace was stolen and you've got a $200,000 house with $150,000 of contents coverage, well, that $100,000 necklace likely is not covered unless you had paid extra for additional coverage. So jewelry, guns, furs, well, those are politically incorrect. But anyway, if you had expensive jewelry, furs, computer equipment, it's less expensive now, but you can add this stuff up. Some of these require additional coverage, or what's known as riders on your insurance policy, for you to be fully covered. So don't just be expecting the insurance company to pay for that $100,000 necklace. And I hope it's nice. Now, other things that are typically excluded from your policy. My sister's, this is sad. Sorry to bring up a sad topic here. Her, what's her dog? Was her dog? It was a silky terrier. So it didn't look like this thing here. It's a, cuter little thing than this. Wasn't trying to bite you. But sure, silky terrier died, and she's talking about getting a new one. And heck, I don't know, I would be fine with a pound puppy, but she wants the small size and known characteristics and etc. And she likes silky terriers, and they don't shed hair as much and whatever. But anyway, so let's say she's spent $5,000 on a Silky Terrier. Not sure how much, if they cost that much. But anyway, so if her Silky Terrier is stolen or whatever, odds are that's not covered. So if you're running a business from home, your home insurance is not going to cover the loss of business inventory. So let's say you're selling coronavirus t-shirts. Well, this is not very tasteful. You're selling coronavirus t-shirts from the house and your inventory is stolen. Well, that's not going to be covered under your homeowner's policy. You'd need a separate insurance policy to cover business inventory. If you had this is a nice looking motorcycle. I haven't had a motorcycle in a long time. Don't have it on my to-do list right now. But if you have a nice motorcycle and it burns up in the garage, that is not going to be covered by your homeowner's policy. You would need a separate insurance policy for that motorcycle. Your car is parked in the garage and burns up. That is not going to be covered by, you'd need a separate motorcycle policy. Whatever I said there. So you'd need a separate motorcycle policy for your motorcycle. If your car burns up, you need a separate car policy for the car. So, but if I've got my riding lawnmower in the garage and the house burns up, that lawnmower would be covered under my homeowner's policy up to limits and such. So it would generally be included there. So just some things to know and keep in mind. So let's say your dishwasher breaks down. We're changing to a lighter tone here. Your dishwasher breaks down. Well, that's still not good news. Is your homeowner's policy going to kick in to get you a new one? Well, no, you could have guessed that. Wear and tear, maintenance, that type of stuff. Stuff happens. My water heater leaks. My water heater leaks and needs to be replaced. Now, it's not going to give me a new homeowner's policy. Won't give me a new water heater, but it may cover damage from that, or likely will cover damage from that leak if I've got a good policy. My house burnt down and I need some place to live while it's being rebuilt. Am I covered? Well, yes, you probably are. So your policy includes amounts, reasonable amounts for living expenses, temporary, and it may have longer times in there, at a hotel, an extended stay and such. So that is generally covered. I'm not going to say always covered because, well, there's always exceptions here, but generally you would expect to, hey, you've got to stay somewhere because your house burnt down or your house is uninhabitable. Your insurance is going to kick in. What you want to do is, well, first definitely get someplace and at the same time be contacting your insurance agent about what you need to do to make sure you're covered. With your typical homeowner's insurance, you also have, and this policy is giving you a lot, you also typically have $100,000 worth of liability insurance that covers you in the event of harm that you might cause or might happen to people on or near your property and such. So if someone trips over your dog on your property and is hurt, well, you might be at fault and you've got coverage for that. Some companies though, and this is another thing to consider, if you've always wanted a pit bull, well, there are some insurance companies, some home insurance companies that will just flat out say, sorry bud, no home insurance with us. So we had our last dog, who passed away several years back, was a German Shepherd, and she was a real friendly dog, except to other dogs. But anyway, so she was a real friendly dog, wouldn't harm a person, period. But we applied for one insurance policy, and one of the things on the list, do you own one of these breeds? And yes and no insurance with them. Some places will just, hey, you have a trampoline in your yard, no insurance from us. Diving boards, no, I mean, heck, slides into your pool. That's, anyway, getting rid of all the fun stuff there. So, depends on the policy. You just might not get coverage because of liability issues. If your dog, they've given you this liability insurance, if your Chihuahua bites someone, I guess presumably you're covered, and they have to go to the doctor. If your pit bull rips off someone's arm, they don't want it. Well, they aren't going to have anything to do with you if you've got that pit bull. Well, many pit bulls are friendly, and like I said, although I'm not a pit bull fan just because they do make me nervous, but most German Shepherds I've seen are friendly, and ours definitely was. So nothing against pit bulls in general. Sorry, pit bull owners. But you might have trouble getting insurance. In addition, a separate thing from homeowners insurance, you might want what's known as an umbrella policy that would protect you. It goes on top of all, it's liability insurance that goes on top of all your other coverages. So we're going to talk about car insurance later on. So if you're at fault for a car accident, your auto insurance would cover you, and then this would be on top of that. So if your liability went beyond the limits of your auto policy, this would cover you. Well, I mean, with the price of cars these days, and with the price of medical care, if you were at fault in a wreck where 7 people were injured and 4 brand new SUVs were wrecked, I mean, that could add up to some big bucks, and it would take more than the typical auto insurance to cover that liability amount there. So what factors do you want to consider when you're talking about homeowners coverage? Well, would it cost to replace your home? And if you have a mortgage loan, which is how most people get their home, don't worry, your mortgage company is going to make sure you're taking this into account, because the home, in addition to being the place you live, is their collateral on the loan. So you must have homeowners insurance if you've got a mortgage loan. But what they're interested in, they don't care if you insure those contents. All they're interested in is, hey, they get enough to cover the value of the loan. So, but for you want to be able to rebuild your home. You also want to be able to replace the contents. Right now, I know when I was in college, my contents fit in the back of my hatchback car. So surely it wasn't a major issue there. But over time, you collect more stuff. Look around your parents' or grandparents' homes, and you see that they probably collected a fair bit of stuff. And if they needed to go out and replace all that stuff, it would be a sizable investment. Or even if you look in your closet, if you needed to replace all the outfits and wardrobes and camo shirts and stuff that you had, it could cost us a pretty penny. Also, liability coverage if someone's hurt on your property. That's a potential need there. And then you might have things like we mentioned, guns and jewelry. Remember, some guns, jewelry, furs, computers may not be covered in full unless you have an additional rider on your insurance. So they'll be asking you questions when you apply for that policy. Do you think the value of your guns exceed this blah 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 amount? And if so, you would likely need to pay extra for that coverage. So back to this. This is one of the key things with home insurance to take into account: the actual cash value policy option versus the replacement cost value. Actual cash value gives you, here's what it cost less depreciation over time. So the couch that you paid $2,000 for 7 years ago might cost $2,500 now, and the insurance company gives you $400. Okay, so you're not going to be rushing out and getting your couch after it's stolen with that actual cash value policy. So remember, that's cost less depreciation. Replacement cost policy, this is really the only policy we want to consider for homeowners right now. You can't get this with cars, more on that for the most part. More on that later. But this gives us what it costs to get us back to new. You know, we can go out and buy the new couch, go out and buy the new TV, go out and replace our wardrobe without having to look for secondhand items, because it probably took years to accumulate the stuff you have, and if they give you the just the actual cash value there, it would take you more years to get back to where you were. So this is what we want. Put us back to the way we were before whatever event occurred. Oh, so yeah, I've already touched on this, but this again, I'm harping on this because it's one of the key things to remember with home insurance is what actual cash value and what replacement costs do for us. So I paid $2,000 for my stolen couch 5 years ago. Will my actual cash value insurance policy give me enough money to replace it? No. Okay, well, I put probably not, but you know, unless the cost of couches have dropped a lot, you're not going to get enough to cover that. A replacement cost policy, let's say it costs 10% more to get replacement cost versus actual cash value. So you have to pay, well, that makes sense. You have to pay more for replacement cost policy than for an actual cash value. And if it costs you 20% extra, is it worth it? Well, yes. Okay, this is one that you want to pay extra for. And likely your insurance cost with this replacement cost policy will go up every year, even if you do nothing. And the reason for that is, well, the cost to replace your items generally goes up every year with that fun I word. Remember, inflation, rising prices. So the costs to replace most items go up over time. It's inflation. So it's going to cost the insurance company more to replace those items over time. Then you may have a guaranteed replacement cost option. This this is built-in with State Farm insurance, but it might cost you even more to replace your roof during a hurricane, and so this will cover that. Anyway, so don't lose too much sleep over that, but you want to be able to get your items replaced in the event of whatever caused the issue there. Now in Florida, we do have hurricanes, and hurricanes get different treatment on homeowners insurance. So we'll talk about deductibles more in a bit, and we know a deductible. I'm going to show this coming up actually next slide. But a deductible is, hey, this is how much you pay out of a pocket before insurance kicks in. There's generally a separate deductible for hurricanes. So hurricanes get their own deductible because for insurers, well, with fire, you have a fire. The insurance company, well, most of their other clients didn't have a fire, so you're just one isolated event. And it's not a big catastrophe for the insurance company. They planned on X% of us having fires this year. Hurricanes, these are generally not isolated events, and you are not the only one who just experienced this hurricane. So this is a bigger event, a major event for the insurer. So they're wanting to kind of protect themselves, and because of this, there are higher deductibles most of the time for hurricanes. So at least a 2% hurricane deductible is kind of the norm. So if that means if you have a $300,000 homeowner's policy and you have a 2% hurricane deductible, you are responsible for the first $6,000 of damage to your house. So if there's a $5,000 worth of hurricane damage, the insurance company pays nothing. you could have a higher deductible. If you had a 5% deductible on that $300,000 house, you're self-insured for the first 5% of damage, hurricane damage. That would mean your insurance company will not pay anything for the first $15,000 worth of damage. Just one note here, the state of Florida was, for a good long while after some hurricanes we had earlier, the number one insurer in the state. They tried to get out of the insurance business. Basically, we as Florida taxpayers are partially funding people who live in high-risk areas. So the state of Florida insures some of the highest risk properties, places that other insurance companies say, hey, I don't want to cover insurance on that place. Well, we're giving insurance on that, and they are paying higher rates, but I'm not sure that they are paying enough rates to where other insurers would jump in and say, hey, we'd insure for that rate. So that means taxpayers are funding some of the people, or partially funding some of the people who live in high-risk areas. Okay, so yeah, back to this. I just mentioned this, a deductible. We know that from health insurance. That's how much you have to pay before insurance kicks in. That's how much you have to pay before insurance kicks in at all. So with health insurance, we remember that a deductible was for generally the year. So your health plan year, and for most people that's probably a calendar year. So if you had a $1,000 deductible on your health insurance, that would mean you had to pay the first $1,000 of health costs before your insurance kicked in at all. Could be exclusions for well care and stuff, or regular screening treatment by your insurer. But basically, you pay the first $1,000 before insurance picks up. With homeowners insurance, that deductible is per event, not per year, it's per event. So if I mentioned lightning earlier, if I'd been struck by lightning 3 times in the same year, each event would be a separate deductible. And if I had a $1,000 deductible, I would have to pay the first $1,000 of damage every single lightning strike. They're separate events. Okay, that's unlike health insurance where it would be cover me for the year. The same deal of per event holds true when we talk about car insurance later. So we talked about this with health insurance as well. What's the main advantage of having a higher deductible? In other words, let's say I can choose to have a $500 deductible on my homeowner's policy or a $1,000 deductible. Why in the world would I want to pay more before my insurance kicks in with a $1,000 deductible versus a $500 deductible? Well, you guys know this. The lower the deductible, the higher the risk for the insurer. You've practiced being the insurance company CEO or executive, and so if there's a higher risk of loss for the insurance company, they're going to charge more. So that means a higher premium. So higher deductible means lower. I just said the opposite of that. A lower deductible would mean a higher premium. A higher deductible, so if you did a $1,000 deductible instead of a $500 deductible, that would mean a lower premium. But with a higher deductible, you have more money that you'd have to pay out of the pocket in the event of a loss. So what you kind of want to do is get prices when you're online or with an insurance agent. Go, well, how much would it cost me per year for a $250 deductible? How much would it cost me for a $500 deductible? How much for $1,000? How much for $2,500? and you decide whether you think the lower premium is worth you self-insuring for that additional risk. You may have some limitations based on your mortgage lender on how much, they aren't going to want you to, they wouldn't let you have a $50,000 deductible because they're worried you might not have the $50,000. Anyway, okay, so another issue here is with the amount of insurance you should carry on your home. If you do not insure your home sufficiently, you might actually not be as covered as you think you are. So what I mean by this is you need to have insurance on your house up to at least 80% of the replacement cost, or the insurers may not pay out the full amount of the claim. So let's say your house is worth $100,000 and you decide, well, I only owe $40,000, so I'm only going to get $50,000 worth of insurance. So you've only insured $50,000, half the value of the home. Now let's say you have $50,000 worth of damage on your home. And you go, hey, well, that's good. I've got $50,000 worth of homeowner's insurance. I'm good to go. I'm fully covered. Well, the insurance company's not going to look at it that way. They're going to say that basically you're only insured for half you only have 50% coverage. So they will assume that you are self-insuring for 50% of losses, and they'll only pay 50% of them as well. So even though you had that $50,000 loss on your $100,000 home, and you think, hey, you're really good, they're going to say, well, we're going to pay our half of the claim of the loss there and give you $25,000. That's maybe not what you expected. But as long as you're covered for at least 80% of the value of the home, then they will pay out fully losses up to the amount of the coverage. So if you had $80,000 worth of coverage and had a $50,000 loss, they're going to pay you the whole $50,000. You had $80,000 worth of coverage and have a $90,000 loss, they're going to pay you $80,000. Okay, so don't be underinsured, basically, is the moral of the story here. What you really want to do is make sure that you've got full coverage on this. Unless you're comfortable with the self-insurance, you want to make sure that you're fully insured. Okay. Otherwise, again, if you're less than 80% coverage on your home, you're not going to necessarily get what you expect payment-wise. Another question here. This is a devious question. This is where my evil twin would come in. Can I insure my house with two different insurance companies? There's a hurricane coming. Well, you actually can't rush out and get hurricane insurance while there's a hurricane nearby. But let's say you're thinking, this is right now, it's not hurricane season yet, and there's no hurricanes in the Gulf. You're thinking, there's a good chance I get wiped out by a hurricane this year. I'm going to get another homeowner's policy on my house. I'm going to be double insured. So when my house gets destroyed, I'll come out good. I'm going to get paid twice. Well, no, insurance company's not going to see it that way. What they're going to do is the insurance companies are going to get together and fight it out, and maybe both of them pay half each. So you can't collect more than the value of your home. That's not the way homeowners insurance work. Well, now here, on the other hand, backing up to a totally different topic that we saw before, life insurance. You can go to 5 different life insurance companies and get life insurance policies. No limit on that. So you can get insured more than once on your life, but not on things like your property, your cars, your health, etc. That you only get one payout on. All right, a few more things. Here's some, we're getting near the end of home insurance, but some things that are going to affect your insurance premiums. Where is your home? How old is your home? How was your home built? So, well, the location of the home, well, this is Florida. If you're right down there near on the beach, you're more likely to have wind damage. Flood insurance is a different issue too, but more likely to have hurricane damage. So it's going to cost you more. How old is your home? That's going to be a factor as well. Different construction types, different constructions types could be a factor there. Of course, brick versus vinyl siding and stuff. Brick home's more stable. The shape of your roof affects the insurance stuff and all. Do you have hardening in your house where your roof won't blow off, stuff like that? The amount of your coverage, obviously, if you have more coverage, it's going to cost you more. Deductible, lower deductible costs you more. The type of policy, we've talked about some of those, definitely going to affect your cost there. Discounts, well, you can get discounts for, well, I've just mentioned one of those things. If your home is hardened against hurricane damage, that's a discount. If you've got deadbolts, that could be a discount. If you've got alarm monitoring, that could be a discount. If you're close to a fire station, that could be a discount. If you've got a fire hydrant in your front yard, that could be a discount. If you've got auto insurance with the same place as your home insurance, that could be a discount. There could be all sorts of discounts there. So definitely something to check into. So where do you go to get home insurance? Well, there are some agents that work with just one company. Example, State Farm, Allstate, Nationwide. So I think I've had, we have State Farm insurance now. I think we've had Nationwide, something with them before. But right now we just have, with a captive agent, we have State Farm auto insurance. Independent agents, where they may deal with several agents. We've got our home insurance, we went through the Florida Insurance Agency. There's a nice office in Pace and around us where they deal with a couple different insurers, not all of them. There's different independent agents which will deal with different insurers. I think I got rid of it. I pulled up, well, anyway, list of the biggest home insurers in Florida. Let me see if I can find that. Homeowners. Let me see. I should have left that open. Okay, yeah. No, that's not. Anyway, yeah, I didn't do a good search there, but I had a list of the by number of policies of the home insurers in Florida, and probably most of them are names that you wouldn't recognize. They're not national names; they're just kind of Florida names that are doing business here. So it's particularly important to. I actually did not pick the cheapest rate when I was dealing with my insurance agent. I picked one that I liked a little bit more based on time in business and safety rating. But anyway, then another option, well, you've seen the Geico Gecko, so you might get direct to the company. Geico, you're doing this online, 15 minutes or more could save you 15%. USAA, although the last time I checked, USAA didn't have homeowners insurance in Florida. They actually sent me a flyer to my address in Florida saying, hey, check out our homeowners policies. And well, so I did. And then I don't know how many of these flyers they sent out, and they said, well, we don't have homeowners in your area. And I'm like, oh, I didn't pay to have this flyer sent to me, you did. But anyway, so there are some direct to company options, or that you can go with, and Geico's the one everybody's heard of course. I don't even watch commercials, and I've seen that Gecko. All right, so definitely shop around for rates. So you can go, like I said, to check out maybe State Farm, check out places like the Florida Insurance Agency is what we've got. Check out other things. Check out online. Definitely check out the Gecko. That's Warren Buffett's company. And this is something that you want to, so we're all about saving money. So you get this best rate now. Most people, and I'm guilty of this too, is inertia or whatever. If you got a policy with State Farm, it's easy to just renew that policy. But checking out, like the Geico Gecko says, or they say in their commercials, 15 minutes could save you 15% or more. You do want to periodically check around, because homeowners insurance, not something super cheap, could be thousands of bucks per year. And if you could save $500 a year by changing insurance, hey, that's $500 a year. And I don't know about you, but I'm happy to have $500 a year. So it is worth checking around for on that, because those rates do change. Oh, yeah. So here's another couple issues on homeowners insurance. We're going to get off to a different topic that we mentioned before with housing, but we'll mention it again here with insurance. It's worth repeating here. So if my property is stolen from my apartment, I'm not a homeowner, I'm living in an apartment, does my landlord's policy cover my loss? This one you should know from earlier. No. Okay, not unless your landlord was negligent in some fashion, and that could involve a lawsuit to get it. So your landlord's policy does not cover your contents. Your landlord's policy covers the apartment. So if a tornado goes through and knocks down your apartment building, which again, that happened, or I don't know if it was totally knocked down, but that did happen in Pensacola a few years back, you're not covered unless you've got your separate renter's insurance. So renter's insurance, something to consider once you've got some accumulated some property, but might even be something to consider before then, because hey, you're knocked out of your apartment, unless you have a friend who's got a couch for you to crash on for a while, you're going to have to find a place to stay. That on short notice is not going to be cheap, so you may end up in a hotel for a while. Also, if your property is lost or damaged, destroyed, stolen, whatever, you're out that as well. And you want a policy with replacement cost. So not actual cash value. So you want a policy with replacement cost for these assets. Over time, you're going to start accumulating items, and you're not going to want to have to pay for them. Also, I said also twice there, but another thing with renter's insurance is you get some liability coverage with that. So if someone's hurt, your fault, visiting you for whatever reason, you've got some coverage for that with that renter's insurance. So, yeah, so this, I said so a couple times there, sorry. I think I need a quick slug of this coffee. I've always been a tea drinker, but I've only been drinking coffee this year. I still mostly do tea. I know you needed to hear that. But, it's HO4 tenants coverage is what the renter's insurance, the official name for that. But don't lose sleep over that HO4 bit. So just renter's insurance, you want to know what that covers. Some of you may end up being in a condominium at some point, and a condo. So condos are a different kind of thing. One of my colleagues at work lived in a condo, and after Hurricane Ivan, he said, I know exactly where my condo is, it's just not where it used to be. So the whole thing kind of got moved and destroyed. But with a condo, you have some extra things going on that you don't have with a regular house. You have shared areas of the condo, so you're responsible for part of this. So there is special condominium insurance to cover those shared areas. And well, know your condo rules. With any of these insurance policies, and I have not done this lately, I've done it not I guess a few years back, ideally you would have an itemized inventory. I have not done that, but what I have done is gone through with the camera and taken videos of stuff, just so we have here's what we had at this point. So that's not going to be good enough really to probably. I've actually even went through and opened drawers and took stuff of that. But if you did have a fire, the insurance company that destroyed your home, for example, the insurance companies, if they're going to pay out, they're going to want to know, hey, what was lost, and maybe have some proof of that. So it's not just, well, you're going to have a hard time remembering, most likely. I wouldn't know how many shirts I have, for example. I still wouldn't after my videos. But ideally, you could do an inventory. There are apps that would help you do that. If you're the real organized person, ideally you would have, what did these things cost me when I got them? Or the room by room photos or videos. This is a good idea to do this periodically, just so you've got some kind of proof of what you've got there in the event of a loss. And well, yeah, this is kind of obvious. You want your inventory someplace other than your house. I like, of course, my online backup for this type stuff. So, well, online backup, I have Google Drive for work stuff and Microsoft OneDrive for home stuff. And those are automatic. So anything like if my photos of whatever room by room stuff, or anything I would put in like my financial folder, is backed up online with Microsoft. I did have Dropbox before, but with Dropbox you can get free up to a certain limit, but then I got a Microsoft. I'm paying Microsoft $100 a year or so, and that includes a lot of OneDrive backup for me and family members. A much better deal than Dropbox. Google Drive, I'm using that just for work. Check into what they have got free for backup. This is backup of files, of course, but I use it for work, so using it for home and work at the same time would mess things up. So anyway, that's why I have the OneDrive for home and the Google Drive for work stuff. So if you do have a loss, you're going to need to make an insurance claim. Well, first take care of yourself. Stop if there's a water leak. Try to get that fixed first. Do everything you can. Make sure you're safe first. And then contact your insurance agent. Well, if it's a real minor claim, we decided, like I said, I've had the lightning issues, and the cost of those were less than our deductibles. So what did we tell our insurance company? Absolutely nothing. We didn't even want them to know we were there. If you do have too many claims, you can be dropped by an insurance company. So that's why a lot of insurers won't insure some of the high-risk places in Florida. If you're right there on the beach, well, they don't want to have anything to do with you in some cases. So that's something to consider. But you do want to make sure that it's not going to be, if it might end up costing more than you thought it would, your claim, so you might want to report it, depending. Definitely if it's going to be more than your deductible by more than just a few bucks, worth reporting. Insurance company is going to have to verify your claim, have to send out an insurance, someone's known as an insurance adjuster, who will check in and make sure everything's legit before they write you a check. So they're not going to, hey, you turn in and go, hey, my TV and my air conditioner and everything were fried by a lightning strike. Well, they're going to want to make sure that's the case before they just cut you a check. So that ends our hiding in place coverage of homeowners insurance. And, well, basically, you do want to know the main things that are covered by policies. So is this typically covered? Is this not typically covered? Is this something that I need extra coverage for? Things like guns and jewelry. What kind of policy do I want? Well, this you better know. Do you want you want the best quality policy? I'm not going to make you do the HO1, HO2, HO3. You may have that on the homework, but not on this, not on the big exam. You do need to know the difference between actual cash value policy and a replacement cost policy, and you better know that you want that replacement cost policy. You need to know, definitely in Florida, well, I said things that are covered, things aren't. In Florida, you've got to make sure you've got a flood insurance policy. Even if you're outside a flood zone and you're flooded, your policy is not going to cover you. You've got to have separate flood insurance. Know what a high deductible does for us, and what considerations in making that call on what your deductible should be. And that ends our discussion of homeowners insurance. This is kind of a long thing. You could have paused me in the middle here, but you can't grab me after class, but you can drop me a note saying, hey, I have a question, or hey, I'd like to chat. And I really, really, really would rather be seeing you guys in class, but not with a virus going on. So anyway, we're all going to be fine. You guys are all low risk people. I'm getting the higher risk, but I'm at the low end of the higher risk of, kicking off. But I'd rather really not end up with anything, so I'm hiding in place in my camera. Check you later. Have a good rest of your day.